BRICS is not stopping the de-dollarization process even after Trump's threats and continues to sign agreements pushing to reduce dependence on the dollar for international trade. In this video, we will explore the new China and Brazil currency swap agreement, and despite Trump's warnings, why is BRICS not stopping de-dollarization? China and Brazil have taken a significant step in the broader BRICS agenda of de-dollarization by signing a currency swap agreement, allowing them to conduct trade and financial transactions directly in renminbi and Brazilian real rather than the US dollar. This move is part of a broader trend among BRICS nations to reduce dependence on the dollar-dominated global financial system and to enhance monetary sovereignty. The $27.69 billion local currency swap agreement between China and Brazil is valid for 5 years and can be renewed upon mutual consent. Both nations aim to shield themselves from dollar volatility and geopolitical leverage that may come through dollar-based sanctions or financial restrictions. This aligns with BRICS' long-standing agenda of creating a multipolar financial architecture, including the exploration of an alternative BRICS currency. Direct currency exchange is expected to reduce transaction costs and foster greater investment between the two countries. Is BRICS succeeding in the de-dollarization move? The rising de-dollarization wave is hard to maneuver as the majority of the nations, under BRICS and ASEAN, are proposing local currencies, urging nations to pivot away from the dollar. The success of BRICS in its de-dollarization efforts can be characterized as incremental rather than transformational. There have been tangible developments in de-dollarization, particularly since early 2022, when the Russia-Ukraine conflict started and the US and European countries imposed sanctions on Russia. China, Brazil, Russia, India, and Russia, China have signed local currency swap agreements and initiated non-dollar settlements. Russia and China have sharply increased the use of the yuan and ruble in bilateral trade, and 90% of their trade settlements happen in local currencies. BRICS is exploring BRICS Pay, a digital payment system aiming to bypass the dollar in cross-border transactions. BRICS has also set up a contingent reserve arrangement, CRA, valued at $100 billion, which allows BRICS members to access liquidity in local currencies in times of balance of payments crises. BRICS has made notable strides in promoting alternatives to the dollar through currency swaps, digital platforms, and bilateral trade settlements. Despite Trump's warnings, why is BRICS not stopping de-dollarization? Trump threatened BRICS many times since his election campaign last year and later after taking oath as President of the United States in January this year. However, it is now impossible for Trump to stop de-dollarization. The increasing momentum of de-dollarization is becoming challenging to manage, as numerous countries within BRICS and ASEAN are promoting the use of local currencies, thereby encouraging a shift away from the US dollar. In response to the sanctions that the US has placed on Russia, a member of BRICS, the Kremlin is actively convincing other nations to abandon the dollar in favor of their own currencies. This trend of de-dollarization is on the rise, with many developing nations eager to participate. Should this trend persist, the US dollar could face a reduction in its supply and demand dynamics in the currency markets, which may result in heightened inflation and increased prices for essential goods in the United States. Thus, it is evident that halting BRICS in the process of de-dollarization is virtually impossible. BRICS is a powerful economic bloc that is bigger than the entire G7 group economically. BRICS represents about 41% of the global population, 29.3% of the world's land surface, and 24% of the global GDP. What is driving Brazil to reduce dependence on the US dollar? The de-dollarization agenda of the BRICS countries, Brazil, Russia, India, China, and South Africa, has gained notable traction with recent bilateral agreements, including the currency swap agreement between China and Brazil. Brazil is a BRICS member and has always been in favor of reducing dependency on the US dollar. However, the recent driving forces behind the currency cooperation between China and Brazil stem from the challenging international financial environment created by Trump. Brazil, like many emerging economies, is facing multiple pressures from the volatility of the US dollar. Protectionist Trump's policies and the deterioration of its fiscal situation have cast a shadow over the US dollar. The size of the US national debt has surpassed $36 trillion, while the US government's tariff policy has brought unprecedented trade turmoil to the world. All these sources of risk and uncertainty have put the reliability of the global dollar-denominated financial system under scrutiny. Against this backdrop, the China-Brazil currency swap will mean that the South American country can tap into yuan liquidity to stabilize its foreign exchange market and cushion the impact of financial turmoil when facing balance of payments stress. This development will not only underscore the deepening of financial ties between China and Brazil but also serve as a positive example for other Latin American countries grappling with the volatility of the international financial market. How will de-dollarization affect the United States? While the US dollar is unlikely to be dethroned in the near term, the cumulative effect of de-dollarization efforts could undermine some of its global leverage over time. Implications include reduced demand for US treasuries, particularly from major foreign holders like China and Brazil. Weakened ability to enforce sanctions, as more countries find off-ramps through alternative financial systems. Declining influence of US monetary policy globally, as fewer economies peg or transact in dollars. While the US pressed sanctions on BRICS member Russia to weaken its economy, the Kremlin is bypassing the sanctions by convincing other countries to ditch the US dollar and use local currencies. The de-dollarization initiative is growing and many developing countries are eager to join the bandwagon. This development will cause the US dollar to lose out on the supply and demand mechanism in the currency markets. If the US fails to export the dollar, inflation in the homeland could increase, leading to high prices for daily essentials. But, which countries will benefit the most from de-dollarization? It is widely recognized that China is at the forefront of the de-dollarization initiative through the BRICS alliance, aiming to seize a larger share of the global currency market and enhance its influence to contest the United States on the international platform. As the largest economy within BRICS, China serves as the primary trading partner for nearly all nations worldwide. With the rapid growth of its economy and advancements in manufacturing capabilities, China has also advocated for the de-dollarization of its international trade. The International Monetary Fund, IMF, reports that over half of China's foreign trade is conducted in its own currency, the yuan. Traditionally, commodities such as oil and natural gas have been traded in US dollars, predominantly on Western exchanges. However, the expansion of BRICS, now incorporating the United Arab Emirates, Iran, Egypt, Argentina, and Ethiopia, is anticipated to alter the dynamics of the global oil market. Should Saudi Arabia join BRICS, the group would then oversee approximately 43% of global oil production. In 2023, 20% of global oil trade was executed in currencies other than the dollar. While the BRICS nations have been deliberating on a common currency, they have also recently established an inter-payment system, which has been embraced by 159 countries. On an individual basis, countries worldwide, including China, Russia, India, Iran, Saudi Arabia, the UAE, and Brazil, have been transitioning towards trade in their local currencies. China and Russia have successfully de-dollarized over 90% of their bilateral trade, now conducting transactions in their respective currencies, the yuan and the ruble. The trade volume between China and Russia reached an unprecedented $240 billion in 2023, marking a 26.3% increase from the previous year. Furthermore, not only nations allied with Russia and China are participating in this trend, but countries with strong ties to the United States, such as India, Brazil, the UAE, Saudi Arabia, and members of ASEAN, have also shown a desire to reduce their dependence on the US dollar for trade. These nations have started to conduct transactions using their local currencies. Thank you for tuning in, and I encourage you to subscribe to our channel for fresh content on crucial global matters. Additionally, please like the video and share your insights on the topic in the comments section below. Have a nice day.